This is Nick Kristoff with the Kristoff team, and wanted to continue the conversation about the loan process, kind of moving start to finish, what to expect at the different stages. If you haven't seen the last video, check that out about getting pre-qualified or pre-approved. And so that's going to talk about the details and kind of that initial stage before that formal application, but really it sets the stage for what happens next. So what we're going to pick up here is right at the beginning of that loan application. If you're purchasing, you may have already done the pre-approval, you've got a property identified, you've got a contract in place, and so now the application is going live and we're going to be going forward. And if you're refinancing, this is right where you'll pick up. So the property obviously is already identified, it's whatever property you're refinancing, and kind of what happens right now. We're starting the application process in those initial stages. And so there's a few key parties that are generally involved. Loan officer, sometimes loan officer assistant, we have an assistant you work with as well, a loan processor, and then also not a direct affiliate of the bank in any way or of the lender, but usually a third-party appraiser that is engaged during this stage. So in this beginning phase, it's really about the paperwork. It's about collecting all of the supporting documentation that goes along with that conversation we had during pre-qualification. So if it's a self-employed borrower, it may be looking at tax returns. If it's a salaried individual, pay stubs, W-2s, whatever's relevant to the conversation we had about your application, where the income comes from, where the assets are, etc. So getting the documentation quickly and thoroughly will make the process go so much smoother. So a tip to anyone out there doing financing is absolutely the more thorough you can get your documentation together, organized, and sent into that loan officer or processor or loan officer assistant, who's ever your point of contact. That will make your life so much easier for all of the follow-up stages. So that's kind of the initial push, is getting kind of that documentation and information in. The loan officer is going to be double checking, or maybe the processor, depending on the institution and how they arrange it, all of that information to confirm that you've actually got the income, the assets, etc., that were talked about on the actual loan application. The appraiser is engaged at that point, so the appraiser will be reached out. They'll either contact maybe the homeowner if it's a refinance, or reach out to the agent to get into the property if it's a purchase, and those things start to happen. The other thing that you get during those initial stages is a copy of your loan disclosures. So you may have locked in an interest rate or talked with the loan officer about a loan program. You'll get usually via email or sometimes via FedEx or something like that, a stack of loan disclosures. And so I tell you, most of those are totally regulated by the government, and they're standardized across most institutions. So there's the actual format may look differently, but the actual content is almost identical. So they're very similar. They talk about similar things. They're standardized through regulatory guidelines as to what information is out there. And so you'll expect to get that packet along the way as well. So that's going to have a lot of key information. Talk with your loan officer about what's in there. But one of the main documents that comes in that packet is a copy of a loan estimate. That is the relatively new form that replaced what used to be called a good faith estimate, and has an estimate of all the fees and costs, the structure of the loan, etc. So that is a great one to pull out, and if there's questions on that one, to reach out to the loan officer. That's kind of setting the stage for what that loan is going to actually look like. You'll have a copy at the very end. There'll be a copy of a document called the closing disclosure that will look very similar to this loan estimate, and that's where you can compare those two to compare the transaction terms, and everything you started with are the same at the end. So that initial stage, basically what you're looking at is document collection and getting all of the right parties engaged. And so from here, in the next video, we're going to pick up right where usually a processing shifts that file into underwriting, what happens through the underwriting stage, what happens during that review, and then kind of moving on towards the finish line of closing. So look for a couple more videos with the remaining details of how that happens. But if you've got questions, or you want to know, hey, when I get a loan application started, what documentation do I need? Feel free to reach out to the Kristoff team. We'd be happy to answer those kind of questions and get you started on the right path. Thanks.